Is XRP on the verge of the most explosive move in its history, or are we all being played? Between an SEC twist that has Ripple investors buzzing, wild analyst calls for $34, whispers of a Trump-Musk XRP power play, and whales quietly shifting nearly 1 billion tokens in 2 days, the stage is set for something big, but not everyone agrees on what. XRP, Ripple. Investors just received fantastic news from the Securities and Exchange Commission. The crypto market thrives on momentum, and nothing fuels that momentum more than a major legal win. Over the past 48 hours, Ripple investors have been riding a wave of optimism thanks to a pivotal update from the Securities and Exchange Commission. According to reports, the SEC has taken a significant step back in its aggressive stance against Ripple. While not a complete surrender, insiders are calling it a de-escalation moment, a move that could mark the beginning of the end for this multi-year legal battle. To understand why this is monumental, we need to rewind. For years, the SEC's lawsuit against Ripple has been the shadow hanging over XRP's potential. The claim that Ripple sold XRP as an unregistered security. This lawsuit froze institutional adoption, scared away big investors, and essentially kept a lid on XRP's price despite its strong fundamentals. Now, the recent development appears to shift that narrative. The SEC has reportedly softened its approach in the wake of recent court rulings that favored Ripple, including the landmark decision declaring that XRP sales on secondary markets like crypto exchanges are not securities transactions. This ruling was a massive win for the entire crypto industry, but for Ripple specifically, it removed one of the SEC's sharpest weapons. The market reaction was immediate. Trading volume surged, whale activity spiked, and social sentiment turned overwhelmingly bullish. XRP holders are interpreting this as a sign that the SEC may be preparing to settle or at least limit the scope of its fight, a scenario that would remove one of the biggest barriers to mainstream adoption. And here's the kicker. Once that regulatory cloud is gone, XRP could finally be free to trade based on fundamentals and market demand rather than legal uncertainty. That's why many analysts are calling this not just good news, but potentially the turning point in XRP's modern history. This legal shift is the first domino in a series of events that could set XRP up for explosive moves in the months ahead. And here's the kicker. Once that regulatory cloud is gone, XRP could finally be free to trade based on fundamentals and market demand rather than legal uncertainty. That's why many analysts are calling this not just good news, but potentially the turning point in XRP's modern history. This legal shift is the first domino in a series of events that could set XRP up for explosive moves in the months ahead, leading directly into a bold prediction making waves right now. Could XRP really be headed to $34 based on a historical price pattern? When traders talk about history repeating itself, they're not being poetic. They're pointing to one of the most powerful forces in markets, recurring price cycles. And according to one respected analyst, XRP's current chart is mirroring up from its past that preceded one of the most explosive rallies in its history. The pattern in question traces back to late 2017, when XRP surged from under 25 cents to over $3 in just a matter of weeks, a staggering 1,000 cent plus gain. At that time, the token had been consolidating in a tight range for months, forming a classic accumulation zone before breaking out violently as volume poured in. Fast forward to today, and the chart looks eerily similar. XRP has been locked in a prolonged sideways structure, frustrating short-term traders, but quietly building what technical analysts call price energy, the kind of coiled spring behavior that often leads to massive moves when the breakout finally comes. The analyst's projection, a multi-stage rally that could take XRP to $34 over the coming market cycle. The reasoning isn't just based on lines and candlesticks. It's reinforced by improving fundamentals, whale accumulation, and now, the potential clearing of regulatory roadblocks. Critics will argue that a $34 price target sounds unrealistic in the short term, and they're right. This isn't about the next few weeks. Instead, the forecast envisions XRP riding the broader crypto bull wave, boosted by institutional adoption, cross-border payment integrations, and possibly ETF-driven inflows. What makes this even more compelling is that XRP's market structure today is stronger than it was in 2017. Back then, adoption was mostly speculative. Today, Ripple's technology is embedded in real-world payment corridors, central bank pilot programs, and partnerships with financial institutions across the globe. In short, the chart setup isn't happening in a vacuum. It's being supported by the kind of macro and fundamental alignment that technical traders dream of. And while the target is bold, history shows that when XRP finally decides to move, it doesn't tiptoe, it launches. But before we get carried away with price targets, there's another fascinating layer to this story, one involving political power players, tech billionaires, and a theory that links Donald Trump, Elon Musk, and XRP in what some are calling the Trinity of Control. If you've spent any time in the depths of crypto Twitter or on late-night financial live streams, you've probably stumbled across the Trinity of Control theory, a narrative that suggests XRP's future might not just be shaped by charts and adoption, but by three towering figures with outsized influence: Donald Trump, Elon Musk, and the Ripple ecosystem itself. At first glance, it sounds like a conspiracy tailor-made for clickbait. But scratch beneath the surface, and you find an intriguing web of political, technological, and financial forces that could, intentionally or not, converge around XRP. Donald Trump has already dipped his toes into crypto waters, hinting at the strategic importance of digital assets in America's future financial competitiveness. If his public stance continues to soften or even turns bullish, his influence on policy direction, regulatory frameworks, and mainstream sentiment could be massive. The US crypto landscape, still largely shaped by political will, could swing in XRP's favor if the right people champion it. Elon Musk, the world's most unpredictable billionaire, isn't directly tied to Ripple, but his influence over global markets and technology adoption is undeniable. Between Tesla, SpaceX, and X, formerly Twitter, Musk controls communication channels, payment integration potential, and the ability to inject narrative momentum into any asset he acknowledges. Even a hint of collaboration or adoption in Musk's ecosystem could ignite speculative frenzy around XRP. Ripple and XRP form the third vertex of this triangle, a network already embedded in central bank pilot programs, cross-border settlement systems, and remittance corridors. While the project maintains its focus on utility, the reality is that political endorsement and cultural amplification could dramatically accelerate adoption far beyond the current scope. Critics will roll their eyes and say this is pure speculation, and they'd have a point. No hard evidence directly links the three in a coordinated strategy. But in markets, perception often moves faster than reality. Even the possibility of these forces aligning could serve as a catalyst, especially in an environment where narratives can move billions in minutes. If this theory has legs, we could be looking at more than just organic growth. We might be entering a period where XRP's trajectory is influenced by some of the most powerful players on the planet. And if that's the case, the next big question isn't about political theory or billionaire tweets. It's about timing. Which brings us to another analyst prediction making the rounds. XRP's long-awaited price discovery phase may be right around the corner. In crypto markets, the phrase price discovery gets thrown around a lot, but in the context of XRP, it carries a special weight. For years, XRP's growth potential has been overshadowed by ongoing legal battles, market uncertainty, and a regulatory cloud that kept some of the biggest institutional players on the sidelines. Now, according to one prominent analyst, those days might be numbered. This isn't just speculation pulled from thin air. The case against Ripple has entered a stage where key legal victories have not only cleared significant hurdles, but also opened the door for wider market participation. The analyst points to a critical shift in market structure. XRP has been coiling in a tightening range, absorbing selling pressure, while whales, yes, the big money players, continue quietly accumulating. In market terms, that's often the calm before the breakout. What makes this moment especially interesting is that we're not just talking about a modest uptick. Price discovery means breaking past long-standing resistance levels and moving into territory where there is no historical trading data to act as a ceiling. That's where volatility spikes, headlines multiply, and the potential for exponential gains becomes real. Add to that the possibility of new institutional products, think ETFs, payment integrations, and banking partnerships, and you have the recipe for what some call a perfect storm. The analyst argues that once XRP clears this last wall of resistance, it could enter a rapid upward revaluation phase that catches retail investors off guard. But as with all market predictions, timing is key. The triggers could be anything from a surprise legal announcement, a major exchange listing in a previously closed market, or even a macroeconomic event that drives capital into fast settlement digital assets. See Chair's recent statement about Ripple case excites XRP Army. When the chair of the U.S. Securities and Exchange Commission speaks, markets listen, and the XRP community listens even closer. Recently, SEC Chair Gary Gensler made comments about the Ripple case that sent ripples, pun intended, across social media and crypto forums. While his words were carefully chosen, as you'd expect from the head of the agency, the tone and context had analysts reading between the lines. Gensler didn't outright declare victory or defeat, but the shift in language was impossible to ignore. Gone was the combative posture of the early lawsuit days. Instead, there was a more measured acknowledgement of the evolving regulatory landscape for digital assets, and a hint that the agency is preparing for a future where certain cryptocurrencies like XRP may have clearer legal standing. For the XRP Army, this was more than bureaucratic chatter. It was a signal that the long, grinding legal standoff might be moving toward a resolution, one that could remove the biggest shadow hanging over XRP's price and adoption. Investors took it as a validation of their patience and conviction, with some interpreting Gensler's remarks as the SEC subtly positioning itself for a face-saving exit from the case. The timing of the statement was also notable. It came amid growing bipartisan pressure in Congress for a more coherent crypto regulatory framework, and just as U.S. courts have been ruling more favorably toward defendants in high-profile crypto cases. Combine that with Ripple's recent string of legal wins, and you have the perfect setup for optimism. Social media lit up within hours. Hashtags like XRP the standard, and even some longtime skeptics admitted the tone shift was interesting. Market-wise, XRP saw a noticeable bump in volume, suggesting that traders were taking positions in anticipation of a legal breakthrough. And if that breakthrough comes, it could dovetail perfectly with another looming development, the potential launch of XRP exchange-traded funds. Which brings us to one of the most eye-catching what-if scenarios in the market right now. What happens if XRP ETFs pull in $5 billion in just the first month? The idea of an XRP exchange-traded fund ETF might have seemed far-fetched just a year ago, but the changing legal tides and growing institutional appetite for crypto assets are turning that what-if into a very real when. And if it happens, the numbers being thrown around are staggering. Analysts have started running the math on what could occur if XRP ETFs attract $5 billion in inflows in their first 30 days, and the implications are massive. For perspective, when Bitcoin ETFs in the US launched, they saw record-breaking inflows that sent BTC's market cap soaring. XRP, while smaller in market cap, has something BTC doesn't, a legal drama that's poised to end, which could trigger an even sharper sentiment shift. An ETF would open the floodgates for pension funds, asset managers, and retail investors who can't or won't buy XRP directly, but would happily gain exposure through a regulated vehicle. At $5 billion in first-month inflows, the demand shock could be unlike anything XRP has ever experienced. Remember, unlike Bitcoin, XRP has a fixed total supply, and much of it is already locked away or held long-term by whales. That means a sudden institutional grab could drive scarcity and price pressure almost instantly. Some models suggest that such an inflow could push XRP into double-digit territory within weeks, potentially even setting the stage for the oft-discussed $34 target if momentum holds and retail frenzy joins in. Others caution that liquidity constraints and profit-taking could temper the rise, but even the conservative projections put XRP at a multi-year high in that scenario. The other wild card? Psychological momentum. A major ETF approval and $5 billion inflow wouldn't just be about money, it would be about validation. It would signal that XRP has arrived as a mainstream asset class, something big money is willing to back publicly. And in markets, that kind of narrative can sometimes be more powerful than the math itself. But while institutions would be buying through ETFs, another key group of players, the whales, have been making big moves of their own behind the scenes. In fact, in just the last 48 hours, nearly $1 billion XRP has changed hands among some of the largest holders. And what they're doing could tell us everything about what's coming next. 900 million XRP on the move. Here's what the whales are signaling. While ETF speculation dominates the headlines, the smart money may already be positioning ahead of the next big leg up. In the last 48 hours alone, blockchain tracking platforms have detected over 900 million XRP shifting between wallets. And these aren't small traders making moves. These are whales. Large-scale holders with the power to move markets and the experience to do it at just the right time. At first glance, the sheer volume of XRP being shuffled might look like panic selling, but a deeper dive into the transaction patterns tells a different story. Much of this movement has been between private wallets and exchanges, a mix that often signals liquidity preparation rather than dumping. In other words, whales may be gearing up to deploy capital into market making, strategic buys, or even coordinated accumulation ahead of major news. Historically, large whale activity in XRP has been a precursor to volatile price action. When they consolidate holdings into fewer addresses, it can hint at long-term conviction. When they spread out into multiple addresses, as we're seeing now, it often points to readiness for tactical trades during fast-moving conditions. Another telling sign, a significant chunk of the 900 million XRP moved when off exchanges into cold storage. This is generally viewed as bullish because it removes liquidity from the market, reducing the available supply for buyers. And in the context of possible ETF approval and heightened retail interest, fewer tokens on exchanges could create a supply squeeze at exactly the wrong time for short sellers. Market analysts watching whale flows warn that these big players are often the first to smell opportunity. And if they're preparing to act, it might mean we're closer to a breakout than the current price action suggests. But there's an even bigger strategic layer to all this. Some traders believe the whale's timing is tied to an upcoming alignment of three powerful forces: political backing, tech adoption, and financial market entry. This trinity of control, as one analyst calls it, could be the key to understanding why whales are moving now and why their bets might pay off in a way that changes the game for XRP. From the SEC's softened stance to bold $34 predictions, ETF speculation, unprecedented whale activity, and the looming trinity of control, XRP's story is accelerating on multiple fronts. We're no longer looking at isolated headlines. We're watching a coordinated shift in the legal, political, and market forces surrounding one of the most controversial assets in crypto history. The next few weeks could be pivotal. If the momentum from these events collides, XRP may be on the verge of a move that catches retail traders sleeping and rewards those paying attention right now. So here's the bottom line. Stay alert, stay informed, and stay ahead. If you got value from this breakdown, hit that like button so more XRP holders can see it, subscribe for real-time analysis as this story unfolds, and drop a comment with your take. Do you think we'll see $34 XRP in this cycle, or is the market getting ahead of itself? The clock is ticking, the whales are moving, and history might be about to repeat itself in a way that changes everything.